Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, October 10th, 2017. Well, folks, a sleepy day on Wall Street here. Nothing but the same, really. We did have a gap higher that initially put in a new all-time high on the S&P 500. Again, you're looking at the SPY here, which is the tracking ETF for the S&P. What I thought was interesting about this morning is that we continue to see kind of institutions slowly unloading. Now, they tend to do that early in the day when there's more volume. Once the market gets into lunchtime, early afternoon, it becomes too thin for them to unload any size. So unless something spooks them, they're not going to do that at that point. But again, you could see yesterday, we opened up into this double top here, and then we had a nice little sell. It was a very short-lived sell. Then we went quiet for the whole day, and then you saw the institutions selling a little bit in the afternoon. Today, we had a very strong gap, and initially, buyers jumped on board coming off of the Columbus Day holiday. People still in a jovial mood. This market seems unstoppable. But then what we saw was a push-up. The next candle pushed even higher and then reversed, putting in what we call a topping tail. It's a technical analysis term that signals a short-term top. And sure enough, it was, at least on the intraday, as the markets reversed. And you can see really how beautiful that is. You got the topping tail, which is a sell signal on the market. And then look, 1, 2, 3 straight down candles into major support. And we did day trade this chart here today, and we did make a nice little chunk of change off of this little dip. It bounced right back up above the moving averages and chopped sideways. We made, I think, 20 cents on a quick little scalp there in the intraday stock chat for another winning trade. Now, the key is here is you saw a little bit of a fade again. We went right to a technical gap fill. Gap fill's support, right? So you have the moving averages right here, which were support, and you can see the market floated off of those. Then you came into this level, which is gap fill, another very strong technical support level, and you can see the markets floated off that one. Now, you could say you had a very small bounce here, but a bigger bounce here, right? Now, the answer to that, and this is educational, is very simple. At this time in the day, it was only a little after 10 a.m. Eastern time. The volume was still a little bit heavier. There weren't just mom and pops that were buying 100-share lots of the spiders here or the S&P futures. I think it's important to recognize that when you got to gap fill, that was your next support level, which is a very good support. But at this time, it was lunchtime. Okay, all the big boys were gone for lunch, and only the small investors were left. And when you just have the small investor, as I always say, you're more likely to see the buy side in the market. And I always say this to our members here at InTheMoneyStocks.com. And the key is understanding the psychology of investors, right? So the big investors, they have more knowledge. They're more likely to sell into strength. They're more likely to do this and do that. The small investor is really geared toward just being a buy-side investor. If you ask the average person on the street, they're not even going to know what shorting a stock is. So what does that mean? Well, it means when they're going to their own portfolios, they're just buying, right? They say, okay, my 401k, I'm going to put more in the market. I'm going to go long. They're just assuming they're going to go long. And that's the nature of it. So when you get a lighter volume market that's comprised of primarily kind of the smaller investor, you're more likely to get a market that floats up. And that kind of explains why you had a bounce here, which was good, but then here at your next support, you had even a bigger bounce, and we've just kind of gone sideways the rest of the day from that point. We might get a 3:30 to 4 o'clock buy program. That's very often the way it works. You could see yesterday right into the close, we had a nice push up as well, and right here as well. So actually, almost you can see it every day going back to last week. You can see right here, then on Friday right there, that green candle, and then yesterday the green candle. So it wouldn't shock me one bit to see the same type of thing where the markets push up, maybe not back to the highs of the day, but maybe at least up to this little trend line. Now, this trend line is obviously important, but in this buy-side market, it's not something that you would hang your hat on at this point in time. Okay, a couple things I do want to point out to you today. There were a few things that did catch my attention. Here's the daily chart. Actually, this is the weekly chart of the spiders. Let's go to the daily chart here. Daily chart again, you can see a little bit of red the last couple days, but nothing to write home about. A small doji today, which sometimes can be a top signal, but again, just like we talked about on the intraday, I wouldn't hang my hat on it just yet until we see a bigger signal. And I want to make that clear, folks. If you're looking for a top in the market, the key is you need to see a strong reversal day, which would be either a big move up and then reversing by the close to be flat or negative, or a big down day, which would have to come with big volume, Then you need a secondary confirming day. The confirmation signal is very important. We teach that here at InTheMoneyStocks.com. Confirming signal to the downside. If you get those two things in line, you could start talking about a top. Personally, I want to see a close even below the 248.92 level, which was a low pivot from a major Federal Reserve announcement. The last Fed meeting, they said they were going to be unloading bonds starting in October, which is currently going on, as well as likely raising interest rates in December. The market initially dipped on that to 248.92 and then rallied back. That's a kind of a bogey level for me that I'd like to see broken as well. But in the very least, you want to see that initial reversal or big down day followed by a secondary down day to confirm a potential top. As long as we don't have that, I would say a neutral float is kind of what you're expecting, much like today, up 25, 50 cents kind of a day. It's not a big gain ever, but you just kind of have this market that's grinding. And a grinding market is what they call a melt-up market, and it's very common in this type of environment where you have kind of euphoric investors and fundamentals don't mean much, technicals don't mean a whole lot as well. All right, couple stocks I'm following. Take a look here. You have MasterCard. MasterCard is moving up towards the close a little bit, but it did have a topping tail on it earlier. Doesn't look like that's going to be a topping tail there, but earlier in the day it looked like that. Also, I think this is an interesting chart on NVIDIA. NVIDIA early pushed above this pivot high on news, but came back in. It doesn't look like it'll close above that level, and that is a small negative there. All right, so again, on NVIDIA, watch to see if you close above this level in the coming days. If you do, it's going to go above 200. I mean, I'm just telling you flat out. If you get a close above this pivot high right here, which is around 192, it's going to go over 200. If it can't, which it doesn't look like it today, it might be vulnerable for selling. And I think what's important is look at the volume today. Very good volume, 22 million. And you saw since the open, let me go to the intraday on this. This is the last thing I'm going to tell you guys about. Look at how at the open, here's the line from the daily chart. You spiked up initially, you kind of chopped, but big money, look at the volume here. Big money came in and sold hard on the back of good news. Anytime you see big money selling on good news, it's usually the signal of a potential top or a likely top in a stock, at least in the general sense, meaning that, maybe it goes a couple dollars here or there, up or down, but generally you're starting to put in a top when big money starts unloading. And I think that's what we saw today, in my opinion, on NVIDIA. Again, doesn't mean it can't go up a little bit more here, but you're starting to see big money exiting this trade. And I think, again, the key is this stock had good news this morning. It actually had news. And for the stock to not hold its highs of the day and take out that high pivot on the daily chart is definitely something that investors should be paying attention to. There's no doubt about it. All right. On that note, I bid you farewell. Come join us at InTheMoneyStocks.com. This is just some of the types of analysis we give, as well as trade alerts. Come get your swing trades, your day trades, everything you could possibly want at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. Talk to you soon, folks. Take care.